What's up, guys? Some of you guys have asked, like, Vic, if we invest money, like, how do we make money in these deals, like with Bell Capital? Like, how does the investors win? That's really what matters. The only reason why anybody invests in multifamily real estate, long-term investor money, is you're going to make money. You want to make millions of dollars, right? That's how you multiply money by investing in these assets. So I wanted to kind of really go over that, and I thought that was something you guys are going to want to know too. If you don't, first, before I get started, if you're first time seeing me, man, I appreciate you. My name is Victor Bell. I've been in real estate for 27 years. I've done $59 million worth of deals. And now we have Bell Capital, which is, I started a private equity real estate company. And we have Bell Capital Fund One, which is a vehicle that allows the everyday real estate investor like you guys to get access to these institutional quality deals that normally are reserved for like big wealthy institutions and companies and like the elites. So my goal is to democratize investments for all investors. But here we go. How do we make money in a deal, Victor? How are we going to make money? Like that's the game. So I'll just kind of give you a deal example so that way you can, and it's better to show, right? Because if somebody can show you something, you get it. At least that's me. I'm not the smartest dude, but I know the game and I like to see stuff. That's why I like real estate. I don't want to be creative. So, for example, we're looking at a deal now. I'll write the deal deets and I'll show you the picture. So, we'll give an example how we're going to make money in a deal. We looked at a deal, 230 units, not this pen, 230 units. I think we can get this deal for 70 million. At least that's where I came in. They want a little more. They want a little more on this deal, but I'm going to hang around the rim. This thing's fading in and out. Hang around the rim to find out exactly like where we are. But I know for a fact that deal worked at 70 million. My brokers took a look at it. My lenders took a look at it right off the bat. So we can get this deal, right? This deal would have been below replacement costs, 1000%. This 230 unit deal, wow, I'll keep on going. We know for a fact to replace this deal, like below replacement cost, to build this deal again, it would probably cost anywhere from 800K per unit, 800,000 per unit to build this property. And it'll take, I don't know, 2 to 3 years. One, if you had to do this again, you'd have to demo this thing. So you got to deal with that. 2 to 3 years to build it. It's going to cost 800,000 or so or more because all the properties around it are condos. So it would, and they sell for a million, million two, million five. $800,000 a unit to just rebuild this thing, replace this thing, 2 years, no cash flow, ups and downs, headaches and concerns, and you got to fill it. You're getting no cash flow while you wait. So right off the bat, buying this deal, 230 units at 70 million is a steal. And this is extra. I go over this with my investors, but I'm sharing it with you guys. This is below last trade. BLT, not the sandwich, but below last trade. So they last bought this property at $120 million. It's an institution, and they actually went off in their partners. I'll go over this later. Their partner, their equity partner, is another big investment firm. They want their equity out. It's been a couple of years. They're ready to go. We're below replacement cost by, they paid 120 million for this thing. Guidance was 190. So, and I think we were at 70 million on the deal. So that's another $30 million below. And that's going in at 90 what they want for it. That doesn't mean that's what it's going to say, but we'll just stick to their stuff. So if I use my numbers, I'm another $20 million below that. So we're almost $50 million less than. We'll use that because that's a real number. $50 million below what they paid for it. So that's an automatic increase. So it will cost 800,000 a unit to rebuild it. And my offer is $50 million below what they paid for it. Less than it was in 2019. So that's what's going on right now. This is the opportunity in the market. So aside from that, this thing is downtown, downtown San Diego. Beautiful property, beautiful location. Location is sick. Location is an A plus. A plus. It's got a 99. Dang, all my pins are gone. Can you guys see that still? A little bit. It's got a 99% walk score. If you guys don't know what a walk score is, that is like where it is in relation to everything else. You got Petco Park right down the street. You got stores. You got shopping. You got Little Italy's right down the street from this property. You have all of these other districts that are down there. You're next to the convention center. You're next to everything. Is right in a walking place for where you want to be down there. This is a sick screaming deal. As a matter of fact, I'll kind of show you some pictures of it. I was talking about that. And then I'll go through this. We're talking about how to make money, right? So, like, this is the deal. This is one. Can you see it? Pull it back some. Yeah, this is the deal. This is this is one of the naturally you have 200 and something units like that. This is one of the pool areas. Again, beautiful property, beautiful asset. And on top of with this deal, it's 96% occupied. So it's not vacant. This thing is cash flowing where it is. And oh, by the way, I think this is my thing. I think we get 5% on our money and double our money at the end or more. And I'll show you how we're going to make money. Like, because this is the deal. First, we need the deal. 230 units. I came in at 70 million. We're waiting to see. Somebody else came in at 80. They want 90. We're at below replacement cost. It would cost like right away. We're already kind of winning because I think at $70 million, and I'll do this for you guys so you get it at 70 million divided by 230 units. You guys got to go through this. That's $304,000 a unit. That's a $500,000. So if we were to have to rebuild this thing at 500,000 times 230 units, we would expect to pay $115 million for that property. And that $800,000 is low, which is what I said earlier. They just bought that thing for 120 million. And that's it. So this thing was occupied. This is a problem in the market. It's an opportunity for us to take advantage of. Again, it's downtown San Diego. Location is A plus plus. It's got a 99% walk score all the way around. This is a score. And I believe based on our numbers, I believe this deal does 5%. We get a 5% return on our money annualized while we hold it and double. That's a two. There you go. And a double when we double our money at the end. So here's what this will look like. Because I already have 70 mil out of the $70 million. I already have $50 million raised. I know I can get $50 million from the bank, from the lenders. I already talked to them. As a matter of fact, we looked at it from a position whereas I wouldn't even get that much debt on the deal. We can get $40 million and still have a great deal on there and just put down the other 30 million at 70. So here's how that would look. We would go 40 million down, 40, I'm sorry, 30. $30 million down. Boom. 30 million. Stick with me here. This is talking about how we make our money. So we all came together. Let's say all of us came together and put up, I have another pin. No. We'll dance between these two pins. We put together $30 million, whether it was 10 of us, put down $3 million, whether it was 300 people, put down 100,000 each, whatever the case may be, or whatever the math is, right? So $30 million is what we would come up with as investors. We all put together our money into the fund, we take down the deal and we buy it. On this specific deal, I believe we get 5% on our money. 5% on that. So right away, we already know we're looking at what, $1.5 million a year just in cash flow. This is only cash flow. We'd be looking to do this. Let's say we do this over 10 years. This is why we make money, guys. This is how this game works over and over again. All right. So that would mean in 10 years, that would be $15 million. Let me rewrite that. $15 million over 10 years. We would get that's 50% of our money back just in cash flow. We hadn't done anything, right? Let's just say the deal just does what it does, cranks right along. That's these deals, man. They're slow and steady. They make money, no big deal. They just keep on doing it. But this thing is in a great location, irreplaceable, institutional quality. It's already full. Odds are it's going to continue to do this, right? Period. End of story. If you take a look at the rents in this country, they've continued to go up since like 1945. Sometimes they stop, sometimes they get soft, but over and over again, every 10 years, rents tend to double, right? Because if you think about that, if you look at where you live at today, let's say you live in San Diego. 10 years ago, rents are probably what, $500, $1,000 higher than where they are today. Some places double. If you look at rents in New York, a two-bedroom, you're going to get, maybe 10,000 a month, 8,000 a month. If you look at Silicon Valley, if you go near Facebook, you're going to get a two-bedroom that's going to be $9,000, $10,000 a month. Like, so this is happening, period. So we can't guess or say that over the next 10 years that these rents won't go up and we won't get an increase on our money. So let's just say this. Let's say our rents went up by another 5%. Another 5% increase in our money. Boom. That's another 1.5 million. But let's say we don't get it for the full 10 years because that's not realistic. I don't think we're going to get 10 years of rent growth in this property. And I'm talking about how we're going to make money here, so stick with me. So let's just say we did this. This is what out of that 7.5 million. So out of this 7.5 million, we already understand that we got what is that 10 We made, and I'm going to do this because I want you guys to get used to this as well. And I know I go through this fast, but I think it's important for you guys to see. So as I'm doing this, you don't think that I'm going batshit crazy. So that's 15 million that we've already made back on our money. We put down 30 million, 15 million just in the 5% plus another, what do we say, 7.5 million, 7 7.5 million. We've made 22.5. That's 22.5. Boom. Just in cash flow on this deal. We haven't done anything. We just like, hey, take care of the tenants, make sure we're responsive to them, make sure the property's clean, keep the riffraff off, make sure our management company is hitting all the targets so far as keeping leasing up and as people leave, bringing new people. But our goal for Bell Capital to manage the management company, because we have professional managers, is to continue to increase the income and the rent on that building. Do it right, but make sure that we increase the rent. So, but right away, we're already at 22.5 and look at what we did. Now this is over a 10-year period. This is a 10-year hold. Steady, slow and steady, just getting the right asset, right location at the right time, taking advantage of it. Because what did we say before? This is a real game. This is how you make the money, guys. Next. So remember this number. We got 22.5. In this specific situation, and we already got 75% of our money back from the 30 million just in cash flow. Now, next, let's say, great scenario, I sell. We come to market, we sell the property. Now, I'm not going to sell the property unless we double the money we had in it. So if we were to pay $70 million for this deal, and we're not talking about the buy down from the debt or anything like that. We put down 30 million. We're not going to sell this property unless we get our 30 million back plus another 30 million. That's a double. That's the 2x, right? That's the 2x. So we would have to sell this property for what? 100 million. And what did I say the original people paid for this property? They paid $120 million just 3 years ago. They're asking $90 million. So just like, hey, can we walk away? Because why? The equity partners got to sell this deal. But for this thing, we would, to double our money, to double the money we had in it to 30 million, we know that we would have to sell it for 30 million over what we paid for it, which was 70. We would need to get it for 100 million. Do you think that an A property in an A location, downtown San Diego, 10 years from now, that we've increased the income, increased the operations, made it a nicer place, took care of the tenants, it's stabilized because it's not going to be 96, it's probably going to be 97 by that time, percent occupied, that continual gradual betterment, market's better, rates are different, whatever. Do you think that we could turn around and sell that property that we paid $70 million for if we were a long-term holder and for 100 million? Absolutely. Why? Because they're buying the cash flow that we've increased it from. They're paying for the income because we've increased the valuation of the property. So we go, you get your 30 million back. So we'll do the whole math for our investors in this thing. So we got our 30 million back. We get another 30 million, right? Now this right here is profit because we sold the property. So I get my piece of that. We get a split, right, for doing the work because we've been on the deal. You're a passive. I'm a general partner. You're a limited partner, which is your passive, right? So I get a piece of this, but stick with me. That's 30, that's $60 million plus. What did I say over here? We made 22.5. 22.5 million in this deal. So that's what? 60, that's 825. We made $82 million. Our 30 million. Man, you can't see that anymore, huh? Here's this. Our 30 million, 30, that's a three, 30 million turned into, I'll just round it, turned into 82 million. Let's say that took 10 years. So what? We all put our money in collectively, whether I was 300,000, 100,000, 200, a million, 10 million. One person can write the whole check. I don't care how that works, right? But I'm just showing you how we make our money. So in this situation, that's a 275% return on our money, right? Got our money back. We made 30 million because I sold it. Plus, we made 22 million five in just cash flow while we sat and waited for this thing to double and double. Now, here's a different scenario. Here's another way to make our money. The better scenario, right? This is always the goal. I go back to the bank and I go, hey guys, we bought this thing for 70. We got a loan for 40. We put up 30, right? This deal now, because we know we've increased the value, is worth 100 million. That's $100 million now. And the bank goes, and I'm like, hey, we're going to refinance. We want to take out our 30. We want to get that back. And they go, yeah, sure, Vic, let's do that. We'll bring it up to 70, right? Because we have to go here. And then we have $30 million non-taxable. That's a non-taxable event. Dang, my little markers are gone, bro. Can't even see it. That's non-taxable. I'll just draw a line through taxable. That's a non-taxable event. Can you even see that anymore? No, sorry guys. But that's the point. I can refinance it, take out 30 million, give you guys your capital back. Now you don't have any more money in the deal. That turns into an infinite return. That's this real game. And then we keep the asset and continue to cash flow the property while we wait. And then later we turn around and maybe sell it again. Right? Think about selling it at that point to double. Who knows? And I won't sell it again until we like, hey, we don't have 30 million in it. So if we go back to market and we sell it for 70 million, over 70 million, what do I want to do? I probably want another double. I'm like, yeah, we had 30 million in it. Let's see if we can't get it all the way back to 130 million. If we sell it now, we're at double and triple. I'm sorry, we're at quadrupling what the profit is. Dude, like this game is a real game. I'm sorry my pen's rolled out. But I'm excited about that because if you really just stop and think for a second, like this is how the money is made. This is how the wealthy multiply millions and millions and millions of dollars and don't pay taxes on that money. They just keep kicking the can down the road. Now, I didn't go over bonus depreciation. I didn't go over the tax benefits, the other tax benefits that get passed on to you guys from K1s, that some of the cash flow that you'd be getting while you waited. Let's say you put in 200,000, right? That extra $1,000 cash flow that you would be getting per month, if I passed over the tax benefits from you as a partner, you might not even pay taxes on that money that you're getting, that extra $1,000 a month. Or if you put in $1 million and you're getting 5% on that money, that five or $6,000 cash flow that you're getting, you might be getting enough tax benefits from that to offset the money, the 6 grand or 5,000 you get. And depending on how you file your taxes, I mean, you got to get with your tax attorney. That may help you offset some of the other taxes that the income that you're getting from your other businesses, depending on what you do, right? So again, that's a tax attorney thing, that's your tax consultant thing, but this game is a real game. So for you guys that are like, how do you make money? Number one, we find a great asset. That is number one. You cannot make money on a bad deal. The market punishes people who pick bad assets. Period. End of story. They always have. It always has. It's the universal law. But the way the money is made is number one, buy the right asset. Number two, buy it right. Right. Put together the money. Make sure you take care of the people. Sure you take care of the tenants. And then we're looking at, hey, can we get a 5% return on the money we put down? That's the biggest thing. Annualized over time, could we get a 5% cash on cash return? Bills up. How long is that going to happen? And then later, do I think the value of this property is going to go up because we increase the income? Could we increase the rents at this location? If it's not now, at some point in the future, will this happen? I don't care how long it takes. I just want it to happen. And then later, could we sell it? And will we have somebody there to be able to buy? I mean, that's the big thing, right? If you're trying to sell to a doctor or a dentist or an engineer or a bunch of attorneys, they may run out of money. These type of deals are institutional quality deals. Who's going to buy this deal? It's going to be MG Properties. It'll be a True America. It'll be a Blackstone, a Starwood Capital. It'll be Harbor Group. It's going to be a big firm that's going to buy this. It's not going to be a mom and pop that's going to run out of money through a market cycle. I'm looking to sell this to behemoths. Really, I'm not looking to sell one property. I'm looking to put together a portfolio of assets and say, hey, man, we have 20,000 units. Do you want to buy us? Do you want to absorb our portfolio for so me and my investors can win, dude? Why? Because I'm looking to become a billionaire in my lifetime and I want to help you guys make millions and millions and millions of dollars. Like we have all been excluded out of playing this game because we're not wealthy institutions. We're not Goldman. We're not Blackstone. We're not BlackRock. We're not Vanguard and Fidelity. All these big major players in this game. They exclude the little guy on purpose. But Bell Capital, I set up a vehicle because I want to help the everyday little investor play this game. And if we all come together and take on the same assets that they buy, we can get big enough to turn around and sell back. That's the goal. So, anyways, that's what I'm doing here. This is how you make your money. Find the right assets, invest in the right assets, hold it for long periods of time. When we double our money, we turn around and sell it or refinance it, play the tax game, and then keep it for a little longer, turn around and sell it later for double or triple what we no longer have in the deal because that turns into an infinite return. I want to do that with you guys. So If you have any questions, go to bell-capital.com. There's two things you could do there. Schedule a call. You get with myself or somebody on my team, go over your specific situation, ask questions, or you can get started, which you can go ahead and register for the portal, take a look at the documents. You got to be accredited. You got to have a good attitude. The minimum investment, if you have 200,000 or more to invest right now, we can do something. All right, so let's go. Let me know if you need anything. If you have any questions, great. Put them in the comments. I'm here for you. I always answer them, or somebody on my team will answer them. Or you can go ahead and you can send us a call or a text. You can call 760-531-8500. That's the office number. Or you can text 760-531-8500. You can put in there, how do I invest with my IRA? How long is the investment? What's the minimum? Can I invest with my LLC in my business? Like anything that we can help you get access to a better class of assets instead of doing what your mommy and daddy did, or your financial advisor says you should buy a home or invest in this growth stock or keep putting money in your IRA, whatever. Like we're here to help you start to play this game with us. And I want to play with you. All right. So let me know if you guys need anything. Like this video, share this video, give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time, because I like all of you guys. I appreciate it. But let me know if you need anything. Let's get after it today, guys. Boom.